Ladies and gentlemen, welcome back to another lesson over here at the High Performance Trader. And today we're going to dive into a data review, right? So this is a new segment that we're doing over here at HPT. And basically its purpose is to break down our strategy, how effective it is, and gaining new insights on it, right? It's a very important part of trading is that you put in the reps. Is to become a better trader, you have to become more familiar. You have to become more aware. You have to really become one with your strategy to understand it, to execute it on a subconscious level, right? You have to build that confidence, that control, that conviction. The only way to do that is by putting in the reps, right? So this is my favorite time of the week. We call it team metrics over here at HPT, right? And it has been a vital role, a paramount practice to becoming a better trader in my experience, right? So today we're going to go through the week ending November 24th, 2024. We're going to dive right into it. Our strategy was up at a 91% win ratio. This week caused it to drop down to an 87.5%, right? So we've had 16 trades altogether in the month of November, and 2 of them have been failures, right? And one thing I'm starting to realize is the 2 trades that were failures, one of them didn't even meet the requirements, right? And once again, this is a very important part and purpose that going through data shows us, right? It's the fact that if you're having losing trades, you have to first ask yourself, are you approaching the market in a intentional, repeatable approach, right? Is your strategy very specific? And if so, are you following it, right? So, it's one of the main reasons we get inconsistent results is because we alter our trading strategy or our approach. We compromise. I call it breaking character, right? Anytime you break character, you're not following your rules, you're bending or compromising your principles, and a product of that is inconsistent results, right? So, but disregard, we're just going to dive into the week and trades that we took and some cool things that we realized. So the first trade was Monday, 11/18/2024. This was a phenomenal trade. You can see we had open print established right here. And end of day, it went down to, what is it? 58574, right? So this was our sweet spot right here, right? And the reason why I call this a sweet spot is because these are 2 main critical levels, pit numbers, right? These are areas with higher amounts of volume and liquidity, right? So these levels have massive significance. What happens at these levels have the potential of giving us a very high probability move, right? So I'm going to watch these levels almost like they're a zone, and I'm going to be watching to see who defends them, right? And when I say defends them, that's where our criteria comes in, right? So if our number 1 criteria, the first step to it is identifying the critical level. The second step is identifying the moving average cross, right? This is the 5 and the 21 EMA. You're going to see I have this EMA as a cloud, right? It's an EMA cloud. And right here in the morning, it's red, and then it switches to green. And then once that happens, you're going to see I get this arrow, right? This arrow rifles off. This is not a go long, right? This is not a buy signal indicator. It is an indicator that brings awareness to my understanding and tells me, hey, buyers have taken control. Now we need our third and final criteria, our final step to actually get in the trade. And that, my friend, is the red bar or green bar ignored. You're going to see here in the example, we get a red candle, green candle, ignores it, then we go long, right? So let's just do this. We can dive right in this trade a little bit more. We are going to, bam, okay. So now, once we rifle above open print, buyers come in, they take back the 50 EMA, right? That's a very important part as well. Price then rallies above, we get the red bar, and then we get the green bar that blows out the top of it, right? So once this happens, right, once the market looks like this, right, I'm in the market long right here. Bam. once this green candle breaks the top of the red, I'm in the market long. My stop now goes below the red candle, right? So now my stops here, I've identified risk, I've identified buyers taking control, and now I'm targeting, what's the upside target here, is 58776, right? 58776, so upside target's pre-market high right here, bam. Price rallies into it. Then you're going to notice here, we get the same exact criteria up at pre-market high, right? A lot of traders in the Discord added to the position here, right? And that was a perfect spot to add to this trade, right? Price rallies into it, red bar gets ignored, same exact criteria. This, my friend, would be another entry targeting the next upside target, right? So this is a very solid way to identify entries. It keeps you from chasing. It keeps you from making bad decisions. It keeps you from being an irrational, unprofitable trader, right? It's going to give you that patience. It's a great way to understand who's taking control of the critical level and to identify the appropriate risk, right? Because especially in these market conditions, price action has been extremely volatile. You need a way to distinguish and identify where your risk is at, right? And look at, isn't it? I love it because red bar ignored, that's our risk. And notice, sellers could not break the low of this red candle. Once this red candle came into the market, sellers could not push price below it, right? So once it's been ignored, it's a very important part. Once the red bar was ignored, which was right here, you're going to see sellers could not push price below it. This is why our risk goes directly below it. All right, so that was trade one. Trade two, phenomenal trade. This was November 19th. Let's swing over to that. November 19th, we got open prints established right here. So once again, we're going to make just a little sweet spot. On this one, we'll do open print in the 50. So we got open print. That's our critical level. Let's just go back here. Previous day low was at 58534. So once again, we'll go 58534. There's our sweet spot, right? We have we have open print. We have previous day low, which is the lowest price from the previous day, right? So if I take this guy, previous day low, and I just put it right there, you're going to have something like this, right? So this is how I approach the market. And I look at this and I go, okay, price is opening below PDL, right? We're below the 50, but if buyers can take this, I'll be looking to go long, targeting, let's see here, upside target in this case would be pre-market, this pre-market level, and then we would probably go end of day as well, right? So for the gap fill, right? End of day was like right there. Okay, so that would be my trade plan. And guys, look, it's crazy how often it happens. Look, buyers take PDL, we ripped a pre-market, we ripped the EOD, then we even ripped a pre-market high, right? This was a phenomenal day. This was an absolute banger, right? Look at this. It's disgusting, right? And once again, what's the criteria? Open print, HPT cross, right? The 5 and the 21, and then the red bar once it's ignored, right? Now, let's just dive in a little deeper on that. It's on the 5-minute. Red bar right here at 10:10 gets ignored right here. So I would got in the market long right here. And my stop would have went probably below PDL, right? So in this trade, I'm risking about 55 cents here to capture that banging move to the upside, right? And once again, this is just very specific criteria that we use to identify profitable setups. 11:21. This was it. This day for any trader that traded this day. This day had insane amounts of volume, right? Oh well, actually, hold on. This is 11:20. Our criteria did not display itself 11:20. So now let's go into 11:21, right? I actually made a different YouTube video on this day because of how awesome it was. But once again, using the pint numbers, right? Previous day high, previous day close, right? Better known as end of day. We have previous day low all the way down here at the bottom. and then we have a bearish target right here, which is pre-market low. So now I'm looking for my criteria. What is it? Open print's way up here. We sell off from it. So now we need to adjust, right? A critical level can be open print, PDL, PDH, or end of day, right? It doesn't have to be open print because all pit numbers have the same principles to them, right? And that principle is massive amounts of volume and liquidity, right? So learn to use any critical level. You do not need to be married or chained to only one, right? Be able to be adaptable. This will help you adjust in any market condition. So price sells off very intensely. I'm being patient here because we're getting a bit extended from the moving averages. Price comes back up into the 50. I don't really have anywhere to identify risk. Once again, I need that red bar to wipe out the green. And then we rip into the 50. If I then break into the 2 minute, which you'll see here on this chart, we get that green bar, rips into PDH and EOD. And then red bar completely wipes out the green, enter the market short, targeting the downside, right? This was I think it was like 78% return on this trade. And it literally happened in like 6 minutes. Just ripped. This day price just was rallying extremely fast. And then if I go to the next day, the next trade, it was that same day. Notice here, once price gets above EOD and previous day high, we come back, we get that green bar, ignoring the red in the market long, stop below it, and then we caught a very good move to the upside here, right? So this trade was actually a little difficult. I took profits as price was approaching open print, and actually if I whip out SPX, you'll see price did rally right back to open print, so it was a little different. But once again, same criteria. Moving average cross, critical level, green bar, wiping out the red right here, long, targeting open print. Well, right? So really good trade, very effective. It was difficult if you didn't take profits when you were supposed to. But once again, that is the approach, that's the strategy. You have to be adaptable and you have to be able to spot it, right? And then let's dive into our loser, right? Our loser was Friday. This was actually I don't want to say it was a tough day to trade, but these are days that happen. There's a couple things I want to point out here that I took from this and that I'm learning from this trade is we have EOD right here. Let's just map it out real quick. Previous day close is right here. Previous day high, which was where we went long, is right there. Okay, so the market looks something like this. So once again, we have our critical levels. We have our upside targets. We're going into the day. We have previous day high. We have previous day close. We're rallying. I can't really find any criteria. There's no moving average cross, no trade. Price then falls back below. We get a cross, but we're not below open print, so I do not go short. We're not below the 50, no trade. And then we rally back up to previous day high, and then we get the red bar that was ignored, right? So there's a couple things about this trade. I felt like I kind of compromised. I felt like I just wanted to put on a trade. I was live on Discord. I wanted to get some action in, and I took a losing trade because of it. I feel like, yes, my criteria was here. That's previous day high. The red bar was ignored. And you know what? Sometimes you're going to get a loser. This is why we have proper risk management. And this is why we go through and do these data reviews, right? It's a part of the game. This was a very challenging day. You're going to see we never really broke the open morning range. And once again, that's just how the market is sometimes, right? You live to trade another day. And if you can't handle one losing trade out of 16, then you're in the wrong game, right? But overall, I think it was a really good week, especially Monday and Tuesday, those first two trades. And if there's anything we can take from this week, guys, it's that when you see your edge, you have to act. If you're failing to execute when your edge presents itself, all this data means nothing, right? It's very important that when your edge presents itself, you pull the trigger. Put your trust in the win ratio. Put your trust in the data review. Don't look for anything special. Don't wait for too much confirmations. Just identify your edge and act. Hope you guys enjoyed this lesson. If you guys want to subscribe to monthly reports, I'll be sending these out to everyone that subscribes. Click the link below, go on my website, punch your email in. And if you guys want to join our team, click the links below. You already know it. I love you all. Stay blessed until the next time, and I'll see you there.